Can I lose money with property? Yes, you can. 100%. It's a risky investment, just like pretty much anything else. There's a risk and return relationship with investing. The more return you want to get, generally speaking, the more risk you have to take, and then vice versa as well. So this whole term that you can't lose with property, to be quite honest, it's a very frustrating term because you absolutely can. I think where this sort of comes from is people who purchase a home, and on average, an average Australian holds onto their home for around that 10-year sort of mark. So you're literally riding out the market ups and downs over that 10-year period. And then because 10 years have passed, you've taken the ride basically, and generally speaking, historically, these styles of growth assets such as shares and property go up over a 10-year time frame, inshallah. Over that period, you've held onto the asset, you've sold it, you've made a gain. Well, that's majority of property investment situations where the people are just purchasing it to live in, they're selling it, and they're making that profit. So for example, markets do drop, and you don't see people, for example, day trading physical property, which really can't be done, but you don't have minute by minute live data seeing the property price as well, similar to the stock market, which does offer that, which is that double-edged sword that I mentioned, because you see the drops. Whereas with property, you don't see it until it's, you're getting that appraisal, a realistic appraisal there, and come sale time. So it's definitely risky. It's not the highest risk, but again, it's not necessarily the highest return as well. The other point I want to add as well is the fact that you have to calculate what your net return is. So for example, if you purchased a property today, and you sold it in a year's time, well, come the time you purchase it, you're going to have to most likely pay stamp duty. You're going to have the purchase cost, even if you went through like a buyer's agent as well. And then if you sell it, you've got to go through all the sale costs and everything as well. So net return, yeah, you might have potentially made a capital gain, which could have made a loss as well. But let's say if you made a gain, well, after your expenses, particularly stamp duty, which is a huge one, you're realistically going to potentially be at a loss as well. So definitely factor that in.